Okay. Good morning. Good afternoon. Hope you're all well. Hey, Marinas, how are you doing? Sound and visual okay. Hey, Christopher, good morning. Hope you guys are all doing well. How did you go for the US CPI last night? Do let me know. I'm doing great. I seem like I'm falling sick, but I'm still around. I'm still alive. What was I gonna say? Probably because of lack of sleep again. Hey Lindy, how you doing? Hey Jimmy, good evening. Thanks for that, Jumarinas. We'll give it one more minute before we get started, or a bit less. Okay. Hey Christina, good morning. Hope you're well. Christopher caught the CPI trade, but did not enter with real money because I was scared. Yep, no worries. That's a fair approach. That's a fair approach. If you don't feel like you're ready, if you are hesitating, or if you're not ready or hesitating for any reason, it's always good to test it out, test out the method, test out the concept on a demo account first as you progress towards trading with real money. Hey Augusto, how are you doing? Radio. Good morning, Stefan. Righty. So, okay, let me get into the frame of mind. Okay, tired. I was trading the CPI. I'll tell you what I did. I did some crazy things. So I was trading the CPI, and then I was watching the Man United Newcastle match. That's at 3 a.m. for me. 3 a.m. all the way to 5 a.m. And then I was up again at about 7. So not a lot of sleep, but I'm back. I'm still around. Okay, so if you did catch the match, let me know what do you think? What did you think the last home match of the season? Hey Diana, we were just talking about the Man United Newcastle match last night that I caught, and that's why I'm low energy today. And also about the CPI, we'll talk about that shortly. If you are new to the session, do remember to drop a message and say hi. Let me know where you're joining us from. For all the regulars, I see you all streaming in. Good to see you all back again for the daily market analysis. I hope you were trading the CPI well, a bit less crazily compared to what I did. I'll tell you about that shortly. If you have any questions at any point in time, please feel free to put it into the chat and let me know. You can help me out massively by remembering to click on that like and subscribe button if you haven't already. And for those of you who are new, the link for the Discord channel is up the top. It's up the top of the chat. Do make sure you join us on Discord as well. Okay, and for everyone in the UAE, I have also just launched my first, or will be launching my first a training course in the UAE, so look out for that. You might see the ads going around. I've sent it around to a few people, so we might be sharing it around as well. So hope to see you all there. Okay. Now, a quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as education material only. Please do your own due diligence as the contents of this webinar are not intended to be a recommendation to a financial product, as your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. All right. Yes, it was quite interesting, the match last night. Glad we won though, so that was good. Now, yesterday, 8:30 p.m. I was, I think at 7:30 I put it into the group and said, watch out, 1 hour 1 hour to the news release. And when the news was released, I unfortunately didn't talk too much in the group. I was trading. The US CPI year on year, it was 3.5. Expected 3.4, came out at a 3.4. A little bit of a surprise, I can tell you. I was thinking that it might, I mean, like we were talking yesterday extensively. I was thinking that it might be about that 3.6, 3.7 level, but it didn't. It came out at 3.4 as expected, signaling a slight slowdown in inflation growth for the US, right? Taking inflation growth from 3.5 to 3.4. CPI month to month, it was a 0.4 down to a 0.3. While what caused I would think that in addition to it, what caused the big consistent drop on the dollar index was the retail sales number. It was, or is it not coming up? It was a 0.7, revised slightly down to a 0.6. Expected 0.4, came out at a 0. This one we kind of expected, right? This one, I think if you refer back to yesterday's stream, I was saying we might not see a good number on retail sales, and that's why we might see the dollar index drop. What happened? What happened during this news event, the series of news event, was that the dollar index was at 104.83. So it sat there, pushed down slightly. At 8 o'clock, it was at 104.83 or 84. On release of the news, it spiked. On release of the news, it spiked down. It went from 104.83 down to 104.41. Right, it pushed down. It was out of the Bollinger, bounced back up, and then continued lower. So it came down to that support that we were anticipating, right? This, if it's at below 3.2 or it was showing a slowdown in inflation growth, we were expecting the dollar index to trade down to that 104.55 level. It came down to 104.55. It bounced back up. It came back down to 104.55 again. So just move that right across. It bounced around this level, and then only at midnight onwards, it started pushing lower down towards that 104 round number support level. Not exactly, but towards that. And then now it's retracing back up slightly. Okay, so it did not have that drop and push back up because we didn't see a higher CPI number. We did see a big drop on the dollar index because CPI was released at 3.4%, showing that slowdown, and also dragged lower because retail sales was down to 0% month on month. Retail sales is quite important. Not a big one that I pay a lot of attention to, but something that I do cast an eye on, because retail sales is about consumer spending. Consumer spending is a major proportion of GDP, which is economic activity in the country. So if retail sales goes down to 0, that's led the dollar index to drop, and then after that continue lower. Okay, so that's what happened with the news on the dollar index. Good morning, Nev. How are you doing? Diana is asking, do you think Man United will qualify for Europa League? I don't think so. Right? I wish, but I don't think so. Okay, and I actually hope they don't, because not just in the terms of they might focus on the domestic leagues, but I hope they don't, just so that I don't have to stay up so much to watch the matches. Okay, with that, I'll tell you what I did with the news release. Right, so we talked about the US yen to sell down at 155.30, stop loss 40, take profit 120. So what I did, I can't move this. Can I move this? I can't move this. Okay, I'll take that away for now. I'll show you what. So I had that order set up there at 155.30. right? Selling down, 120 profit, 40 pip stop loss up there. Okay, then on release of the news, we saw that pop, we sat there and then it popped lower, it triggered my trade, it came down to about 50, once it got to about 50 pips to the downside, right? I thought, oh great, this is going to continue lower because of the big initial move, so I thought it's going to keep pushing lower. I moved my stop loss down to break even, and then literally the next moment it came back up, hit my stop at break even or slightly more than break even just to cover the commissions, right? Came back up, hit, and I was out. So I was like, oh, all that waiting for that move, didn't close out at 50 pips, came back up, closed out at break even. Wasn't very happy, but in the scheme of things, quite fortunate because it would have gone up and hit my stop loss at 40 pips, right? So I was one part of it was like, oh, it hit me out at break even. Then after that, it continued pushing up, and then I was quite happy that it didn't close out at minus 40. But those of you who have gone through my many different news trading courses, you know that I look out for this kind of move where it drops, bounces back up, and then drops back down again, right? So I always say that that entry there is the safer entry. When you start looking for it to turn, once you look at that turning point and the close of that, you look at that as the more aggressive entry. All right, so that's what I did in this case. Because I got closed out at break even on that first move, it bounced back up, and then I realized I was outside Bollinger, came back into Bollinger on the close of that hour, got into the trade. This time stop loss 30, take profit. I was down to this point, right? Down to this point, exactly where it came down to. So 55 pips to the downside, closed out, and that was it. So didn't make money on release of the news, bounced back up, looked for that zigzag pattern, came back down, hit a 55, I think it was 54 something pips profit to the downside. And what I actually missed out, this one I was a bit annoyed, was that I was sitting, I saw that hit and then it bounced and sat around there. So I was quite happy. I was quite happy that it came down and then bounced around this point because was thinking that maybe it might even turn back up as it was pushing. Then at that point, while watching the match, I see that coming back down. On the end of the match, I thought, right, this looks like a smaller scale move of this. And if this zigzagged down, right, I was thinking that it could do the same where it zigzagged and went down, but I got away with my 54 pips profit. I didn't want to get into that, into the next one or hold one going to sleep, because, or rather if not, it would have been a trade like that at 5, stop loss of 30, a take profit down to 70, would have hit very nicely to the downside. So it was one trade break even, one trade profit, and one setup missed from yesterday, just on the US yen alone. All right, so that's what happens with a news release. That's what happens with a news release, and that's what happens broken down through the whole thought process. A lot of times, you know, people would just look at it and say, oh great, if you sold at, right, if you sold at this point here, you would have made 160 pips to the downside. It's not always the case like that. When you actually do trade, like Christopher was saying, you know, being a bit scared, or when you actually see the price moving, I do tend to break it up into many different trades that way. Okay, so just sharing with you all the 2 trades that I got into and the 1 trade that I missed from last night. This morning, when I was here, right, when I came in, I saw that drop. Right, I saw that drop. And I thought, right, I'm going to come in and look for it to zigzag to the downside again. So look for it to do that again to the downside. So it pushed down, bounced back up. I was looking for this to close a little bit lower before I would sell it down, but fortunately did not get into that as it's bouncing back up now, retracing to the upside on the US yen. So again, another setup missed, but this time possibly for the better, because if I did get into that trade, I think it was about that point I was looking for. Yeah, about that point I was looking at, I would have a 30 pip stop, right, where was it? 30 pip stop loss, and then I was going to go for that kind of move, or even, you know, that kind of move down to this point, 60 pips, and it would have just sat there, made a bid, and pushed back up and hit my stop loss. So very fortunate, did not get into that setup there on the US yen. Okay. Does that make sense? Put it into the chat, let me know how I was breaking down that whole move on the US yen, on what I got in, broke even, what I made money on, what I missed on potential profits, and what I missed on a potential loss as well. Good? Put it into the chat, let me know if it makes sense, if that helps with your thinking of a trade as well. Okay, so while you put that in, then the next thing we had from this morning was the Aussie employment numbers. Big surprise here, well, relatively big surprise here. Employment change went from a minus 5.5, big upward push to 38.5K. But unemployment rate went from 3.8, revised up to 3.9, and then got released at a 4.1. So a bit of a mixed bag here on the Aussie employment numbers, and you see that that actually caused a move right back down again on the Aussie. Right, a move back down again on the Aussie because unemployment rate went from 3.8, revised up to 3.9 to 4.1, despite that upward push. And then you can see this move at 9 pushing down also coincides with that slight bounce back up on the dollar index to the upside. Okay, so that was the news from the Aussie employment number. Later today, we do have ECB financial, well, in 40 minutes, we have the ECB financial stability review. Not entirely too keen on that, especially with the way the euro has been moving. We have economic forecast for the EU. We have 8:30 p.m. unemployment claims for the US, and then not much else. Building permits, yeah, and then not much else. Through to tomorrow, again, not much until the CPI number for the Eurozone. Most likely going to be the similar as expected, not expecting a big surprise there. Not expecting the euro to change too much, but there are some setups that I'm looking out for, especially on the euro dollar. Okay, so what I'm looking at for today is possibly a retracement, and then a continuation. But there are some levels that if it breaks, then we're possibly looking at correction back up again. Make sense? Okay, and also with the way the CPI was released, where was it? No, go back there. And also with the way the CPI was released for the US, despite it going from a 3.5 to a 3.4, we did not see a change, a massive change towards the rate cut scenario. In fact, it went from a 96.7% chance of a rate staying the same to a 97.3% chance. So more likelihood for it to stay at the current level than to cut the rates. In July, we're seeing it drop, right? We're seeing it drop from a 72 to a 67. A lot of time between now to July, so we're going to not focus on that too much. We're going to focus on June 1st. Okay, June 12th, but the meeting in June. Okay, now looking at the charts, take that one away, and that, and that. Okay, so now that's a resistance, and we can even drag this whole thing down. So we've seen this whole move to the downside, don't need that. We've seen that bounce, done that. It's broken through. Now, if you look at this point here, okay, let me see how I can do this better. Take that away. Okay, that makes good sense. All right, now we have that support at 104. If it breaks 104, and you would remember to consider this as an area rather than just one line at 104, and that's at 61.8 level there as well. Dinah said, I read they mentioned in September they might cut rates. Yeah, it's most likely September. They did say later into the year, so it's most likely September. Okay, so that point, let me have a look first. Okay, that point, I would even consider that. So about 103.40, right? Don't need that. Okay. So now that's what we're looking at on the dollar index. Okay, let me do this. Let's say resistance. Okay. So dollar index today is the 16th of May. All right, post CPI. What we've seen is that continuation to the downside and push to the downside on the dollar index. If you took that top down, that makes sense. Let's see, what about this one? Yeah, so it's that area that we're looking out for. Okay, I don't need that. So what I'm looking at, or what I'm considering, is that the dollar index would have to stay below this 104.50 level, right? This 104.50 level, because we do have that 23.6 and that 104.55, that swing level there, holding it as a bit of a resistance. It doesn't even look like it will get to this point. What looks like is that it's dropped, it's retraced, and then it's going to continue lower again. So main thing we're looking at here is dollar index is retracing, needs to stay below 104.50, right? And then if it breaks 103.90, it could get to 103.40. If support of 103.90 broken, could trade down to 103.40. Take all that away. Okay, Now, so what that means in this case is that we've seen that push. We're looking for it to retrace, or it's retracing now. Needs to stay below that point. If it pushes back down, it could sit here for a while. If it does break this level, then we could see it trade lower towards next support level. Okay, and ultimately it needs to stay below that resistance level. Thanks for that, Lingopedia. I appreciate that. Now that makes sense. I'm happy with that. That trend line is too far away. Not going to adjust it at this point. Well, if I adjusted it, dragging it right down, it would be quite a while more. Okay. So now looking at this, then onto the Kiwi. They're actually looking at the way the dollar is moving right now. Actually, what's the word? Not neutralize, but invalidates one of the setup I'm thinking of on the euro. So I'll tell you about that. Okay, so that did not trigger. It did not push up and turn back down on the Kiwi. Well, rather it did push up and turn back down, right? It went up, tested this level, and then turned back down to within that 2 candles or 3 candles, but you would have invalidated this move, because once you saw that the dollar index, or once you saw that the CPI was 3.4, you would expect it to push up. You would say, I'm not looking at that. Okay. Now, given that it's pushed up, retrace slightly, we're looking at this. It came to 23.6, testing and likely to push up further. We are in quite interesting territory. Right, we're in quite interesting territory because there's a lot of empty space up here. All right, a lot of empty space up here. I would say that if the dollar does continue to push, if the dollar continues to push down, and we could see this. Let me see a few levels here. Yeah. Take that points. Okay. So what we're looking at is it's gone up, it's retraced, bouncing off the 23.6 area to push up. Now you're looking at this to continue higher. We're thinking that 6145, right? You got 30 there, it's very near. I wouldn't go for that exactly, right? But you'll be looking at that kind of move. But you'll be thinking of a hesitation at that point. Okay, so 6-1 we'll buy. We're looking for the Kiwi dollar to retrace, complete its retracement, push back up, break above the previous high. We're looking to buy at 6145, 20 pip stop, 70 pip take with a hesitation at 6180. Okay, so here we go. Kiwi, we're looking to buy, continuing on with that dollar weakness, to buy at 0.6145, stop loss 20, take profit 70 with a hesitation at 0.6180. There we go. Okay, I'm happy with that. Anything to add to that? No. Let's see where this one is. Yeah, so 38.2 is right there at the support area. If it comes back in and it breaks this level, then we might see it test, but looks like it's going to bounce from here. So this is where we'll consider this area if it breaks. Then onto the Aussie. Aussie actually did quite well, pushing up. right? So you wouldn't have got in at this or this, you only get in after it closes to the upside. This would have gotten you about a 45 pip move to the upside, taking a very long time as well. But the thing now for the Aussie is that if it does continue to push up again, I'll be more keen on the Kiwi because there's a bit more space to the upside. We do have that level here, that 61.8, so we saw it test and come back down, and that swing level here, that whole resistance area up there. So I think that for the Aussie, what you could be looking for is a couple of bases, maybe a test and reject of that resistance level or resistance area. So how I would look at this would be to possibly 6710, no, 6710, give it a bit more space, 25 pip stop. You come back down to this point at about 50 pip take to the downside. Yeah, okay, so that's what I'll be looking out for. We don't actually need any of this, that's all done. This one we'll keep to this point here. That one's done. Yeah, okay, I'm happy with that. So I'll be looking for Aussie to push up, right? If it pushes up, right, because in the middle here, you wouldn't be looking at anything. Only if it breaks above that point, then it's too near. I would prefer the Kiwi to the upside. On the Aussie, I'll look for a test and reject. There is a slight chance that we might see a very non-textbook style of a head and shoulder forming, but I don't think there'll be something to watch out for at this point. I would rather a test and reject. So 6710, 25 to 50 to the downside for the Aussie. It's either or on the Aussie and Kiwi, not both. We're looking to sell at 0.67. Oh my, typing. 0.6715. There we go. 10, 25 to 50. Hey Pips Apprentice, how you doing? 6710, stop loss 25, take profit 50 to the downside. Right, so it still is not completed that retrace yet. We're possibly going to see it test and then reject, looking for that move. Then on to the US yen. We had a whole talk about that area, whether it could come to this point and bounce. Didn't do that. It broke right through to the downside. Trend line is done. Take that away. It came right down to that 61.8 level and bounced. Right? It's held at that 61.8 level. Take that away. And I'll keep that there. Take that away. Okay. So now looking at this, I would be thinking of, nope. Right, it's at this 23.6 level. Looks like it's going to retrace a bit more. Okay, so we're looking at this whole point here. Yeah, we're looking at this point here, whether it could retrace further, but it needs to stay below this area, or it needs to stay below the round number level at 155. Right, it needs to stay below that 155 level. So complete its retrace, so sitting there, could push up and then turn back down. Wouldn't be looking to get in. It would be nice. You could, if you're a little bit more adventurous, you could be looking to sell down at that point. Stop loss 35, take profit 60 to the downside. I think that would be a bit aggressive. I would think that if it retraces, rejects, and pushes down, then you could be looking to sell down at 153.50, stop loss 40, take profit 130 to the downside, with a hesitation at about 152. Let's see. That would be a 70 pip move to the downside. I think that would be reasonable. I think you can even go a little bit higher on this. 153.55. Stop loss 35, take profit 75 to the downside, just at that point first. Right? If we're seeing a continuation of the weakness on the yen, of the dollar index. Do you expect the yen will drop that much? I feel that it might. Why I feel that it might drop that much is that, well, firstly, if the dollar index does drop, it's going to push it lower, and maybe the Bank of Japan might take the chance, not really intervene, right? Not really intervene into the yen, but take the chance to bring it back down and keep it around this level, because they did say that 152 was kind of their kind of sweet spot for now, right? So, but ultimately it needs to stay below this point first. And I think that would be reasonable. Okay, so yen, a bit more waiting, a lot more waiting to do. We'll be looking to sell at 153.55. Stop loss 35, take profit 75. Stop loss 35, take profit 75 to the downside. Okay, then onto the pound dollar that did not even have a chance of reversing. Take that away. One thing that we've been, what if price holds that support level? If price holds this level, then we could see it. Wait, before I say that, just right, because we had that number as well, which could bring some weakness quarter on quarter into tomorrow. Nothing from the yen. I think if it holds, if this level holds, then we're going to see it remain within this range. Right? I think it'll be within this range, but I think with the way it's moving, it's quite likely that I'll be looking for it to move further to the downside. So what I mean by that is, if it holds this support, then we'll possibly see it bounce around that area. A bit like that one there. Okay. Yeah, I don't even think it'll bounce that much. But looking for that. Okay. Maybe next week we'll see some. Yeah, I think that the dollar index, while it could weaken further, we're heading into April. This is March territory. Could be short-lived. It could be a short-lived move. I don't see a big continuation to the downside. And then on. Okay, so one thing I was going to say is that dollar index, right? We're anticipating that continuation to the downside, but what if it bounces and continues up, right? What if it bounces and continues up? Then instead of thinking of buying the yen, the US yen to the upside, I would possibly be thinking, or more likely be thinking of selling the pound down. Okay, we have that, we keep that, we don't need this. I don't know why I have so many random circles here. Okay, all right, so I like how that has moved. Take that one away. I like how that rejection, that 61.8 level has held in April. All right, so yeah, so why pound? Why looking? Right, if we see that dollar strength come back into play, it's already happened once and twice, or once generally in April, where it came up to that 61.8 level, tested and rejected with massive downside. I know that's a news as well. So it's at the same point, right? So I'm looking at this and I'm thinking that if the dollar does come back into strength, I wouldn't be looking at that. I'll be looking at about, yeah, that point. I think that's, no, that's not even close. Okay. I'll be looking at that point. Of that down to about that 50% level. So down to about this point here. All right. So why dollar index, if it strengthens, it's already happened once, that it strengthened and pushed back down, is at the same point now, 61.8 being a good level, good fib level there. This is where it bounced off. Zoom in a bit. This is where it bounced off and then broke down. So I want to see it break past this point before I sell it down. Referring back to the current is break past this point and sell it down. So I'll be looking at 1.2655, stop loss about, you would, my take profit is about 80 pips. I wouldn't want it at 50. It should be at 50, but I wouldn't want it at 50. I think that if it pushes down significantly enough, you can get away with a 30 pip stop to the downside. Okay, so 1.2655. Stop loss 30, take profit 80 to the downside. This is if we see a dollar recovery. Okay, but yeah, good question there, Diana, no worries. So I hope that makes sense, right? Why not the US yen is because we have that big downward pressure. We've just seen it push down. If it pushes back up, there are a lot of levels here that I could hesitate on. So that's why I'd rather look for that to push down. And then the pound dollar seems to have a bit more clearer space to move lower. Might even come down to, yeah, okay, I'm happy with that. Then on to the euro. This was the setup that I have been watching since the start. Since the day, since I came in, I was like, oh, great. Now that the euro has pushed up, all right, now that the euro has pushed up from this point up, tested that resistance, looking like it's going to reject back down. Trend line is going to be up here, that way. Might come back down. I'll take that way for now first. Might come back down and bounce around like that, but I'm looking for it to break down. Okay, still looking for it to break down. it might not bounce around that much. Let me just make it a bit simpler. It might come down, bounce, break, right? So I'm still looking to sell it down below that level. Oops. I'm looking at 1.0850. Stop loss will be about a 30. Take profit, you could go down. Doesn't make sense to be at that point. Let me see. Yeah, down to this point, which is that 50, 60 pip move to the downside. I'm looking at that. Doesn't necessarily have to be, because that trend line is only like 2 points, right? You could also catch the other one. So that's just indicative, looking for it to test and break to the downside. So 1.08. Oh, what's that? 1.0850. Stop loss 30, take profit 60. 30, take profit 60. Again, that's dollar recovery. If the dollar continues to weaken, could it bounce? Yes, you do have that opportunity as well. Right, so it could sit there and then push back up, where you would be looking at a move like above 1.09. I want that round number, right? A 30 pip stop, and then a good 70 pip take profit to the upside as well. So you do have two opportunities here on the euro dollar. If it breaks that level and hits lower, then you could look to sell it down. If not, bounce, look to buy it up. There is two opportunities there. Put that in. Buy 1.09, stop loss 30, take profit 70 to the upside. This is if we see DXY weakness, or if we see the strength come back into play, you look to sell it down from 1.0850, 30 to 60 to the downside on the euro dollar. Okay. Sweezy came down, bounced. Well, this was not a tradable move, but it did come down, hit our level, and bounce right back up. Just for fun, it did that, but not something that we could have traded on. Now tested and looking like it's going to reject this level to the downside. Can we sell it down? There is a bit of a level there. US Swiss franc made some move. It had to make the move. With the way the dollar index was moving, if the US Swiss franc did not move, I'll tell you, I would be completely lost. I'll be baffled with what's happening. Right? So finally, it's broken that level. It don't do anything at this point because this is that area that it could bounce around. So unfortunately, it's moved, but it's moved into the area that I don't want to do anything yet. At the best case, if the dollar continues to weaken, 8960, tight stop 20, take profit down to 65 towards the next support level on further dollar weakness to the downside. Okay, so 8960, stop loss 20, take profit 65 to the downside for the US Swiss franc. Now we're looking at this, we're looking to sell 0.89, forgot, 6020 to 65, 0.89, 60, stop loss 20, take profit 65 to the downside, and then onto the US CAD. It did that very nicely, but you would have been stopped out. So this, if you got into this trade, would have been a 20 pip a loss on the US CAD because it did come down to test the support level. It did bounce back up. So you would have gone in, or maybe you have gone in and then gone up and then come back down immediately, hit your stop loss. Okay, so that would have been potentially a loss on the US CAD. It happens. Then if you look at this push to the downside, right, that's holding it lower. So that one is going to also provide a bit of a resistance, holding it lower. So it's in that area. We want to see it. I was going to say we want to see it break to trade lower, but I'm thinking whether this could be a dollar and we could see it bounce. Dollar weakness. Dollar weakness naturally will see it come back down. But I'm just thinking whether it could bounce. No, I don't think. No, I don't think that. So I'll be looking at this 1.36. Stop loss 30, take profit 50 to the downside. Not the best setup because of this area here. If you took that point, there's not a lot of move there. So what I'm looking for is that it's gone back up, it's tested this area, and then it's going to push back down. So because of that, then 1.36 stop loss 30 would be good, but given that it's broken that support, no, I'll still keep it at 30. I'll do a take profit down to 50 to the downside. Okay, so US CAD, we're looking at a sell 1.36, stop loss 20, take profit no, stop loss 30, take profit 50. Stop loss 30, take profit 50 to the downside. Bear in mind, a lot of we're not even sure where this is moving yet. It could push higher, it could turn back down. This is going to have a lot of these setups could change quite quickly, but we are covering our bases on, you know, dollar weakness scenarios, dollar strength, yen by itself, dollar recovery, weakness and recovery. This is more dollar weakness, so we're covering the bases there. Okay. Nev, would this have effect on the dollar? Joe Biden on Tuesday to unveil steep tariff increase on Iran. Tax, a trade war, not trade war, but potential trade war because of protectionism and through tax can have an effect on the dollar, not a massive impact. Through the, depends on what imports is going to apply, but also depends on, yeah, it depends on what kind of imports is going to apply on. It does have a little bit, but not massive. Okay, and not something I would really factor in on the analysis. Okay, then we looked at yesterday, pound, yen, bounce. I was thinking bounce, great, but it didn't do that, so it broke lower, pushing back up. US yen is pushing, and that's why we're seeing the pound yen push. So that trend line is done. Bounce back. pound dollar might push lower, or might test and push lower. What it looks like it might do is this. So that one, I would keep the same view that we want to see it push and do that. So maybe from what we saw previously will be 190, below 197, stop loss 60, take profit 130, first to the downside, but nothing right now. Could you trade it up? Yes, but I think that it could be a bit messy in the middle here at 196.50. So I wouldn't, but you could trade it up first. Okay, Euro Yen push down. This worked out very nicely when we spoke about it on Tuesday. At this point, right in the middle, I wouldn't be too keen on it. So nothing on the Euro Yen, Swiss Yen pushing down. I haven't looked at this for a long time. Push, tested that resistance, push down, now likely to bounce back up. Yen pulling it back up to test again. I could just move this right across, and that's what I'll be looking for. Yeah, no, I'll just draw it again. So it would be a bit like a test. Oops, would be a bit like a test and reject back down again. Then on to gold. All right, we spoke about this yesterday, thinking that it could test and reject 23.77. Hang on a second. It could test and reject 23.77 with a double top and trade down to 23.55. Not something I didn't trade this on the news, but it did that exactly. It went up. We were right here. It went up to 23.78, so it formed a double top. 23.77, rejected that, came back down to 23.55, which was here, and then pushed back up again. We know why it pushed back up, because of that dollar weakness pushing it up. Okay, so I'm quite happy that that played out, although it was not something I traded at that time because of the news. It's too volatile on gold, but nice to see it work out. Now at this point, Aussie, well, not dollar, gold, dollar index should cause this to sit there. I would say that, I think someone said that in a group, I think it was Jimmy or BL, I think it was Jimmy. Unless it gets above 2400, we might see that. It's consolidating. Dollar weakness could push this up. So yeah, consolidating. So dollar index, not dollar index, gold is, yeah, Jimmy, yeah, oh man, what's happening? Okay, gold is consolidating, needs to break 2400 to trade up to 2431 is massive. I think that another level could be 2415. 15. And there we go. It's still sitting there, so that retracement is still forming. We'll wait for that to end and continue to the downside. Okay, so a lot to talk about today. Went the whole hour. Hope you all found it interesting, useful, helpful with your trades. Please remember to help me click that like and subscribe button, and I'll see you all on Discord. If not, then I'll see you all tomorrow, end of the week, of a massive week, relatively massive week. Please remember, trade well, trade safe. The question is, how much retracement should we expect for gold? I don't try to guess how much it could retrace by. It could be at this point, it could be just consolidating. I think that it just needs to stay above 23.71, 23.80. If it breaks 2380, then we could see it trade back down that way. But with the way it's moving, it looks like it's just consolidating with a bit of a push to the upside. Okay, I don't even think that big an arrow. I think a smaller arrow towards that point. Thank you so much, everyone. Thanks, Augusto. Thanks, Pips Apprentice, Ju Marinas, Stefan, Diana. Thanks, Jimmy. And thank you, Lingopedia. Take care now. Bye-bye. Thanks, Nev.